Do you know how the likes of Slice Uni operate? What do the RBI's regulation changes mean for these BNPL platforms? What does it mean for you as a customer? Welcome, I'm your host for the week, Pranav, simplifying yet another topic from the startup world. Without much further ado, let's dive a little deeper and answer all of these questions. Before we get into the news, it is crucial to understand the status quo and the evolution of the BNPL products. Many of you might not know, but Slice started operations back in 2016, but it caught the public eye only recently. Let's hear from Rajan Bajaj, the founder of Slice, about that one growth lever which brought them millions of new customers.
Sure. So most of our growth has happened in the last 2 years since we pivoted to card. Slice was primarily focused on buy now, pay later till 2019. It was in May 2019 when we pivoted to a card first product. And today card is majority of the transactions that happens on Slice.
If you're interested to learn more about the BNPL space and Slice's evolution, do watch the complete unfiltered conversation, link in the description. So you see, it was simply the experience of cards that gave them immense growth. But did you know there was a lot going on behind the scenes to enable a credit card-like experience while still allowing interest-free payments over 3 months? Let's break it down. First, let's introduce all the players of the ecosystem. Slice, Quadrillion Finance, State Bank of Mauritius. Slice is the online brand we interact with. Quadrillion Finance is Slice's non-banking finance company. State Bank of Mauritius is the bank with a PPI license, who you may have noticed during transactions. PPI, or prepaid payment instrument, is like a gift card which you can top up. So Slice struck a deal with the State Bank of Mauritius to issue these cards while working in the backend to give the feeling of a credit card to the customer. It does so with its NBFC wing, Quadrillion Finance, which tops up this card with a loan. But why didn't they issue their own card? Why depend on a bank? Well, until recently, an NBFC wasn't allowed to issue any type of card, hence this approach was designed. Therefore, State Bank of Mauritius was crucial in this equation for Slice to give the feel of a credit card. There wasn't much to lose for them as they were merely providing the instrument, and it was Slice along with Quadrillion Finance who would own the risk of customers defaulting. But RBI's recent circular changed everything, which stated that loading of PPIs from credit lines was no longer permitted. Overnight, this whole setup of Slice was invalid. So if you're a Slice customer, what does it mean for you? Slice has since changed its terms and conditions and is now operating as a conventional credit card product with a 36% interest rate. Customers are certainly not happy, and most other companies will have to follow suit. Is this just the beginning of more regulations in the BNPL space? Time will tell. Meanwhile, it would be interesting to see how Slice and the others innovate to re-establish themselves as credit card killers. And that's it from us. Hope you learned something valuable today. If you did, don't forget to hit that like and subscribe button for more startup related value content. And until next time.